Good afternoon, everybody. Welcome to your Tuesday edition of the TraderMerlin show on the eve of where one of you will win $555 million in the lotto tonight. I wish you all luck. I have entered myself. And I'll tell you what, if I do win, I told you, last time we had $1 billion lotto, said if I win it, I'll probably still do the show, believe it or not. Now, I may quit my job, but I'll still do this for fun just because I like it. 58 minutes today? No. We'll keep it, I'm targeting 45. I'm trying to whittle it back a little bit. See, it's a lot of content to be doing every day, but we'll do our best. Anyway, welcome everybody. Today's topic is going to be pretty much just open Q&A. I have a whole bunch of questions that have come in. Obviously, we have a lot of stuff to talk about with breakouts and some nice moves up through some key levels, so we'll look at that, and I have a bunch of questions to answer from all of you. So if you have questions, those of you who are new, you know what you should do to get your questions answered on the program live. You just type a couple question marks before you send it into the chat. That way I know it's directed at me. What's going on with my stream there? Do we have a weird stream going on right now? That looks kind of weird. Can you get a scholarship? Not the question I was looking for, Thomasina, but yeah, you having screen problems? I think so too. Let me real quickly, just going to do a speed test here. That it shouldn't be that grainy or awkward like that. So let me just check real quick, because normally I don't have any connection issues. Yeah, my internet is absolutely fine right now. So yeah, better now. Okay, I don't know why that was. That was awkward. Let's get things going. I want to talk about a ton of different stuff. So let's walk through our top 7. Then I'll do economic announcements and earnings calendar. Maybe even switch that order. Let's start right now. Yes, I wish I was streaming from Mars with Elon Musk. Okay, so here's the big stuff today. And this is actually going to be a couple questions that came in. One from Tom as well, talking about Netflix. There's your earnings calendar for today. So you guys can see Netflix posted better than expected earnings. They beat by 10% on their earnings surprise, and now up about 7% in the after-hours session. So a nice pop there for Netflix. You can see quite a few. That's really interesting. It's saying that I'm having connectivity issues. The stream's bitrate is lower than the recommended bitrate. All right. I'm not sure what's happening there. Nothing has changed in my room, so I'm not seeing any dropped frames at all. So I will continue on. Let me know if you guys see any problems that I need to address or fix, but something's glitchy here. All right, so when we started earnings season last week, really looking at JP Morgan and Morgan Stanley, the conversation was that this was foreshadowing a fairly ugly earnings season, as they were both going, no, recession, we're not doing very well. And I think you saw a little bit of negative market action last week. Well, this week, all of a sudden, it seems like all these numbers and almost everybody on this list is beating earnings. You notice there's, as far as negative earnings go, you only had Ally Financial was down 7. As far as expectation, I say it's 7% less than expectations. But everybody else on this list beat. Now, granted, there's a lot more than this, but I just cherry-picked the big names, the big market cap companies, and only 3 of those were down in actual price action today: Johnson & Johnson, Ally, and J.B. Hunt. So that's actually pretty damn good for the market, and I think that's why you saw such a positive rally. It's like, I think the expectations were negative last week, and now that's really shifting, and a lot of optimism maybe towards earning for this quarter for the remainder of the companies that are reporting, and I'll tell you about all the ones reporting tomorrow. Now, the other pieces of data which I thought were interesting, and I was definitely watching this one because I think the housing market is that next shoe to drop. I'm seeing people significantly drop their prices here in our local neighborhood. The numbers that are noteworthy right up here, you can see building permit. Oops, that's good. You're not getting the questions yet. Don't jump the gun, Merlin. You can see you got building permits and housing starts up here. I was expecting these housing starts to be worse than anticipated. I was correct on that one. Building permits, didn't really have an opinion there. I think that when you go through times of recession, actually building permits should start to increase because more people are just going to do things in their home and build on, whereas new home construction, housing starts should be declining, and therefore we did see that. So this is kind of in line with the slowing economic market. Nothing overly dramatic. The 1.59 was our previous month. They expected 1.57 million new starts. We came out at 1.56. So slightly worse than expected. Again, we'll have to wait and see what that trend is forming there with housing starts, but a down move in housing starts is rather expected. Now, the big stuff is actually happening later on today. It says it's not receiving enough video from me, yet I am streaming 100% the same as I always have. Let me, one sec. I wonder if I can switch this right now. This may do something weird. Let me see if I can switch this real quick. Okay, we should be connected. All right, well, I switched over to a different server, so I should have no issues going forward. Let's hopefully that fixes it. Sorry about that. Yeah, I know, David. Not sure what's going on there. That's like the first time I've actually had that graphic problem in a long time. So fixed. I switched over to a different server, so we should be fine there. I'll have to wait and see how it all pans out, but hope that fixes it. I hate when there's tech problems and I have no tech support. Anyway, that was your economic calendar for today. All in all, earnings is great. The economic calendar wasn't exactly rosy for the U.S., but not that horrible, given all things even. Right now, I think the main focus for anybody out there is going to be looking at the European Union and the U.K. because they have their CPI and PPI numbers coming out later tonight. You see up at the top there, the final Euro CPI numbers were in line with expectations at 8.6. I can't believe how they will keep their CPI number at 8.6 when they're really not raising rates at all to fight inflation. Strange days for Europe. All right, that's it. Let's dive into our markets. I'm going to start from the bottom, work our way to the top. Gold, even though we had this nice market rally and a significant drop in the U.S. dollar, gold just didn't really do squat today. You can see we've had 3 days of consolidation. You have these 3 small real body candles, small topping and bottoming tails. So really, it appears like not a lot of interest in gold at all right now, even though everything else is moving dramatically. I still think that we're going to end up hitting this 167 mark or 1670, which is, that baseline we've had for the better part of almost 2 years now. It has not been able to break 1670. So that's where I think the magnet of price will pull it down to. Moving up from there, we got crude oil, which is up 1.04% today. All in all, just a little follow-through from yesterday's really big move. You notice the volatility and choppiness here. That obviously has a lot to do with what's going on with the inflationary data, the dollar, the OPEC meetings, etc. But nice to see the dollar rally back up. If you are looking at trend lines, right, this would be technically your trend line because you're going from this peak here on June 14th and running through the next 2 points of contact. That means, tomorrow we could hit that downward trend line, and there will be a lot of people watching that one, maybe even adjusting it to fit this current peak right now. So we'll have to see what that follow-through is like for tomorrow, but that's what I see for your downtrend on crude oil. Do we get a break of it and all of a sudden get above these levels right around 105? Could be, but I'm one that just likes to go with the trend at all times. Okay. Dow Jones Industrial Average. We've talked about the 4 indexes, the S&P, the NASDAQ, the Russell, and the Dow, and how they have kind of a cup and handle formation. Now, the S&P kind of breached that a couple days ago when it had that really sharp sell-off, but to me, it's still reflecting the same basic story, that there's strength building in those indexes, and you can see that here on the Dow. You had this low put in on the 17th of June. We rallied up. For whatever reason, we turned here right around 31,882, sold off a higher low. Now, we just breached that 4 days ago with this nice hammer formation, but the follow-through on the hammer has been great, and it's been continuing. Now we're right back up to that 31,882 mark. If we get above that, then 32.9 is going to be your next stop, and that could happen very quickly because at this point, it feels like you're getting bottom feeders coming in, and a lot of people thinking, this market's a good deal, we're going to go higher and higher. It's going to happen. Now, is this the bottom for the market overall and we start making some new highs? I don't think so, but you never know. Things could happen. At this point, if you are bearish on the market, you might want to pull those bets off just a little bit and maybe see how it reacts if it gets up to this 32.9 mark for the Dow. And you'll notice these other indexes looking very similar. Now, that said, on the day, 2.48% gain for the Dow. S&P was slightly better than that at 2.91. And notice, where is it at? Exactly the same highs that we saw on June 28th and June 27th of this year, meaning this is poised for a breakout. Tomorrow is going to be very interesting. Do we respect this supply level and start to sell off, or do we start to see it rip to the upside? Now, Jerry says, I hear that a lot, Merlin, but it is bearing, whoa, where did that go? I'm missing all kinds of stuff. What just happened there? That was weird. I just saw a comment, and then it just disappeared. Oh, you took it away, Jerry. I was just reading your comment, Jerry. All right. So I guess, tomorrow you have to make that trade plan yourself. Do we plan for the breakout trade here, or is this going to be a reversal at these levels? I would wait about 15 minutes into the market open to make that decision. GD says, not a good supply zone, though. I would agree. Oh, you're asking what a cup and handle pattern is? Here, I'll show you guys. We've covered these quite a bit on the program here in the past, but it is, since I'm talking about it, I will add one in here. Bear with me. we'll put that up here and new slide. There we go. Okay, so if I slide this over here, and a cup and handle is essentially, you can have one of two ways. You can have something that is trending up, right? So you got price trending up, and then you have, at this point, people call that a double top. That's a cup and handle, right? So I'll just go cup plus handle. No, this is not an X-rated artwork, folks. That's just this piece right here, right? And it can be at the bottom of a downtrend too, but this is generally where it's the most powerful. You can have a third little dip down, and that's called a ascending triangle. So this pattern here, where you basically, the whole premise is though that these lows are getting higher. The high remains about equal, right? You notice it's equal here, equal here, equal here, but it's just building pressure. Looks like someone's butt. Oh, see, I knew you guys were going to go down that. Oh, boy. Anyway, the whole, basically, since we're looking at price action in every asset class, I don't care what you trade, if you see a picture like this, it's telling you that somebody's winning the battle. In this case, it's going to be the buyers because these lows here are getting higher and they're advancing, whereas the highs are staying the same. And a lot of people say, oh, well, the sellers are in control because they're not letting price go higher. While that's true, price just keeps hitting that over and over. Remember, every time it hits this supply zone, it's going to be taking away whatever orders may be there and eroding that supply. And ultimately, what will happen, it might do it even again, it'll ultimately, with a fairly decent probability, break through to the upside. That is an ascending triangle, and a descending triangle would just be the opposite, where you have price looking like this. Boom, there's a cup and handle, or descending triangle, right? And one thing for me that's important is this line needs to be pretty much horizontal. I know some people, I see them draw their descending triangles looks like this. I'm like, well, that's not really a descending triangle to me. That's just a downtrend. So the whole, or one of the more important pieces is that equal level where things stay the same. All right, there you go. Matic, a good chart example. All right, let's check and see what Matic looked like. I have not looked at Matic today, although it was one of the big gainers out there. Let's look at Matic. Yeah, so a good example. Thank you for that one, GD. Actually, who was that? Chase, thank you for that one. And I'll put a horizontal line right here. And of course, this is all after the fact, right? But what do we see here? Even if I had it right here, without it even hitting that top part at 62 cents, you guys could make the statement that, well, it's still in a downtrend, right? So it still looks weak, but it hasn't made a new low. Therefore, it feels like it's gaining strength. And now we came right back up to it. So at this point here, that is a complete cup and handle. The key is, what do we expect to happen here? Do we expect it to break to the upside or trend back down? Now, if you're a trend follower like I am, the probability is higher that this is ultimately going to go down because the bigger trend is more powerful. But this little tiny piece, this cup and handle, this might be the beginning of a whole new uptrend, right? We just don't know. So now all of a sudden with Matic, you saw it pull back down. There's your ascending triangle because it actually respected a second time, sold off, and then broke through, and now you're off to the races. So this is a pretty good example. Thank you for this one, Chase. I appreciate it. The other piece here that's important to know is with ascending triangles or descending triangles, a lot of people try to anticipate where they're going to go. And one way is to measure from the bottom. Let me do my snap tool. From the bottom of this cup and handle or triangle formation, and just use a measuring object, right? You just use that to measure how far is from the base or the top of the triangle to the baseline. And if it breaks, that gives you an expectation. And notice where's Matic right now? It is literally dead on to that measuring object. Yep, it already broke, Chase, but it's a good example. And, you know, I generally don't like after-the-fact examples because a lot of time I feel like most instructors, including that instructor who I hate with all my heart, they'll cherry-pick the charts and just find things that go, oh, see, everything works right here. Well, look, a cup and handle, descending triangle, ascending triangle, they don't always work. But to me, it's just a story. What's going on behind the scenes? And if I can get the sense that buyers are starting to build strength, great. And that's what we have right now. When you look at the equity indexes, we are still moving on up, right? We started at gold, made it to the Dow. Here's your S&P 500, right? Notice S&P 500 It made this little low right here, which is not technically an ascending triangle, but it still basically says the same thing. It's been building strength. So if we get through there, 41.17 is where I think you're headed with the S&P, which was up about 2.91% today. And it gets even better. You had 3.5% for the NASDAQ today. And technically, it broke this ascending triangle. You guys can see I've got it drawn here, and I've gone through this high point, which was back on June 27th. It challenged it again on July 8th, and today we've broken through it. So question I have is, do we get follow through, right? Do we get some market moves to the upside? I'm not sure. I am no oracle for the future. The problem with the NASDAQ in particular is if it does continue on, you've got this giant box right here. And where I draw that supply is going to be right there. All right, so basically between 12,543 and 12,936 is your next target. And we're already at 12,320. So not a lot of leg room on this breakout, but after that, you start to see some bigger jumps for the NASDAQ 100, which was our third place victor. And the breakout of the day goes to the Russell, which has a similar picture to the NASDAQ, but it finally broke out today. And again, continuation would bring it probably right around to 1888. And finally, we had Bitcoin, BTC. This is the breakout that I'm really interested in since I have a lot of my cash is sitting on the sidelines in the equity markets and options, but almost all my capital in crypto has been deployed to crypto. So watching bullish moves is obviously very good to me. Watching the breakout here, we have the yellow box drawn. I drew it basically because of that peak we saw on June 16th, and today Bitcoin breaking through that. Now the good news is, if this momentum, which has been up for 5 days straight, I mean, we've moved from a low of 18,885 to 22,008, which means you're looking at a $4,000 move for Bitcoin in the last 5 days. Great. Notice there's this huge unfilled gap up here. Now, this is on the Bitcoin futures. I understand that you won't get a gap on the regular Bitcoin chart, so I actually like the futures sometimes. But if you look here, 28.9 is the next target, which is another 6,000 points up from current levels, and there's really nothing here to stop it. Johnny says 29 is the big roadblock. Yeah, you can see that, well, basically this whole area, right? We could whittle this down even more, but this giant yellow box, which is where it consolidated last time. The thing that anybody who's in crypto should feel good about is we're actually making a new high. It feels great to say we're making a new high. And again, if the shakeout from Three Arrows Capital and from Genesis and Crypto.com and BlockFi and Celsius and Voyager, if all of that can kind of be controlled and the major stuff is already out, then we should see a bounce and a recovery in crypto. But I still have this looming belief that we're going down, but I'm glad if we rally from here. Hey, Merlin, did you see that BTC USD triggered a pi cycle bottom some days ago? I did not. I did not see a pi cycle. You're talking 3.14, what is it, 3.1415926, something like that? I don't know. I did have someone ask me if I thought this was a double bottom on it, and sure, yeah, you can call it a double bottom. I mean, really, the only way you know that it's a double bottom is if it actually ultimately breaks through the high from after it hit the bottom. And what I mean by that is, here's your chart of Bitcoin. At this point right here, we don't know if that's a double bottom. Hell, we don't know if that's a bottom or anything. So it rallies back up, and then it comes back and challenges those lows like it did here. Is that a double bottom? Well, the only way you know it's a double bottom is if it actually starts to move up from there. So now people are like, okay, well, it looks like a double bottom, but in my opinion, the only way you can really confirm this is a double bottom is if it actually breaks this high from July 8th. And that high is, get the high price on there for you, 22,550. So now that we've broken through that, yep, double bottom. And with a lot of this stuff, it's after the fact. It's in hindsight to look at something like a double bottom. Because a double bottom could turn into a triple bottom, quadruple bottom. It could turn into just a breakdown and nothing happened. It was consolidation. So there you go. Merlin, I'm assuming you're still holding your ETH longs. Yes, I do. I have a variety of different entries, Chris. I have a whole bunch of different entries in it. So I've been buying for years. My original was in the double digits, so a long time ago. TradingView indicator for you, search above, check out later, every pi cycle. Okay, I'll check it out. Why not? I'll learn something new. Steph says, bear market, sell the rallies. Agree. I'm a huge believer in that if you have identified you're in a bear market cycle or just in a downtrend, then short the rallies. If you're in an uptrend in a bullish cycle, you're buying the pullbacks. However, one of the big I guess, how do I define this properly? I guess one of the biggest potential portfolio gainers is getting on a turn early. So what is that turn? Now, I agree with you that we are still in a downtrend. It's irrefutable that we're still in a downtrend on Bitcoin or even the major indexes. But if this is now the breakout that signals the beginning of the next move up, then maybe I want to start acquiring some more here. If you are not a buy and hold investor, someone who is just being more of an active trader, well, if you're buying this breakout here on Bitcoin, expecting it to rally up to 28 or 38 or 68 or 150 million, great, good for you. But you got to put a line in the sand and say, well, here's where I'm going to be wrong. And for me, that's just below these lows here. The low from July 1st of this year was 18,630. So if it got below there, you should probably jump out of that and sidestep it, because it most likely will continue on down if it breaks those levels. There you go. Right. And so one of the interesting things for today was the dollar index. So we expected there to be a dollar pullback. We've gotten one. I drew out this little zone here that goes back to July 6th, 7th, and 8th, even to the 9th, where it just kind of went sideways for a couple days. You notice this yellow box here, right? That would be how I drew my demand zone. Maybe different than some of you that draw it from Online Trading Academy. I do things a little bit different. That's just how we do it. The important part here is we broke it. Not only did we break down below, but we actually closed below the low of this candle from July 7th. So that, to me, sets the table for an even further sell-off here. I mean, granted, we're right at it, so I'm kind of splitting hairs. We're literally at a micro pip below the stop-out point, but nonetheless, we are below that level. So now you're looking at about 105 for that dollar index. And part of the reason you saw such a robust rally in this market today is that dollar index was selling off. Obviously, it's earnings, but it's also this dollar. Now, we look down here at some of those commodity prices today. You had not huge reactions from the bond products, but some slight reactions here from your commodities. So you had corn was down on the day. You had natural gas was down on the day. Soybeans down on the day. Lumber was up, which is kind of weird because normally when you have the dollar that week, you get a surge or a move up in some of these commodities. Did not see that today. So that was just kind of one of the pieces that felt like it was almost depegging, right? Meaning it's just not working like it used to, but that's what happened out there today in our overall equity markets. There, done deal. Oh, and by the way, let's check out NFLX. So here's your Netflix today. Well, I'm sure we'll see Jim Cramer boasting about this one tomorrow and saying, see, I told you to buy it. Yeah, you did, but that was $600. Right now we're at 217. Now, I drew this, I think that this is a green line here. Let me get rid of this one. So that horizontal line on your screen was, I've had multiple people ask me, well, where would you buy Netflix? Where's a good point to buy Netflix? Well, it was trending down, so why bother buying it? Now, I said if it gets above the most recent highs and can prove to us it's making some new highs, then that might be an opportunity. Well, tomorrow morning, if all things open up normal, we'll open up right around 217 on Netflix, which is above that 204 mark, which was the high going back into early June. So this may be that little bit of reversal that a lot of people are expecting for Netflix. If you are looking for the reversal, never forget, you've got this monstrous gap that went from 333 all the way down to 245, and like an $80 gap on Netflix there, which may fill. That's to me one of the magnets of price is a gap, and we haven't even started to fill it yet. Maybe some great opportunity down the road here in the future. But that's going to be a little bit down the road, not obviously immediately, but it's nice to see all of a sudden things kind of changing slightly. So let's go to Tom's question. Tom said, I look at what's happening in the charts, but I also give consideration to what's going on in the real world, like news, revenue costs, etc. As an example, I look at Netflix and I see the chart showing some of the next significant levels date back to when Netflix was mailing CDs out. Should I consider these levels that far back in your opinion? Well, for me, the answer is yes. I don't think that most people, and Tom is very detail oriented. For me, if I look at a price chart, I don't care what they were doing. I mean, hell, if I look at a Microsoft level going back into the 90s that has never been hit and we're coming to it, great. I'm still going to trade that level. And it has nothing to do with the technology or what the company was like at that point in time. It's everything to do with people's interaction with price charts and how they see price. So if someone's looking at this chart right here, let's go to, I'm just going to look at GameStop for an example. No one is looking at this GameStop chart right now going, oh, well, back here, they were just video games. Now they're NFTs and going to the moon. No one was thinking that. It was based purely off what was going on with the price action. So if I look at something like you mentioned with NFLX, and let's say we go out to a monthly here, we came smashed into this demand zone right around 180, 190. You're right. If we go way down to these demand zones here in 2011, yeah, I think that was still DVD time, right? I think that was DVD time. If we got down to these levels down here, I would still pay attention to them. Absolutely. Because people will look at the chart and they're trying to figure out where is it going to go, right? Where's that demand zone? Well, it's right there. No one's saying, oh, when Netflix back in 2016, that's when, the Gladiator pack came out and they had a ton of demand. No one's thinking that. I mean, it is interesting from a historical perspective to think what was the company doing like, how have they evolved. But, oops, 1 second. Here, let's look at, if I look at Amazon on a monthly, do you think I'm going to, I highly doubt we'll ever get back to these prices that bring Amazon down to 78 cents. But, if it got back down to this level at 78 cents, would I go, man, this is when Amazon was selling books. I don't know if I'd buy it. Exactly, the Blockbuster days. Love the Blockbuster days. Those are my favorite. So no, Tom, and again, this is just my personal preference, and it's just the way I trade. Makes no difference to me what the company was doing. Hell, it may even had a different business model back then, right? Maybe they went from iced tea and now they're a blockchain company. I don't care. I'm looking at that price chart because I'm anticipating some technical trader or some algorithm to be using that zone as a buy point or a bounce point. It's not a stupid question, Jerry. So what the hell happened to Netflix? It looks like at this rate it would be a penny stock. Well, look, here's the thing. With Netflix, what happened to it is you had this huge surge. So obviously when COVID hit, it really boosted them even more, right? They were already doing well, but when we were all just locked in our homes looking for something to do, everyone just bought Netflix. I didn't have a Netflix account till right here. It was like March of 2020 is the first time I actually got a Netflix account. Now, I have watched, I believe, almost every piece of content on Netflix. At a certain point, I'm like, okay, how many times can I watch this movie? I've already seen it 3 times. I think part of it is people have different choices now with regards to channels. Maybe someone's had Netflix or they've watched too much. You also, if you look at the chart of Netflix, it's really designed to be reflecting consumer growth. And at a certain point, Netflix has already got the part of the population they're going to get. They're not going to grow and get subscribers anywhere near the rate that they were going to get, right? So, you go back into the early 2000s or mid 2000s, or so 2010s, excuse me, where, their user base was just soaring, right? Well, they're not getting that kind of growth. And so the analysts have realized that the growth is nowhere near what it used to be. That means revenue is not going to continue to increase. And that's when you go from a growth stock to a value stock, right? Growth stocks are ones that perform really well because, hey, they might not be making a lot of money now, but 2 years, 5 years, 10 years down the road, they're going to be huge, right? You look at Amazon back in 2000, they were barely struggling. I mean, they were a garbage company. And, people started to buy into it because, maybe they're going to be an internet retailer, right? They were doing books. And then you get into 2002 and 3, Amazon started to get more people's attention because they were doing more sales online. And some analysts said, hey, they're going to be the ones to be the dominant marketplace in the internet. And more people bought that and they paid a premium for those earnings. Well, as long as those earnings continue to grow at a great rate, Amazon stock will keep going up. If it doesn't, Amazon stock's going to fall. Well, same thing here with Netflix, right? Netflix looking pretty bad. GD, also another good one. He says, but so many people have been sharing Netflix accounts. Yeah. Do I share a Netflix account? I do not share a Netflix account. I actually have my own Netflix account. Yep. Nope. No sharing there, so you can't report me. But I think that's one of the major parts is that their subscriber base is not increasing anywhere near what it was back in the heyday, especially compared to 2020 when anybody who was on the sidelines about watching media just grabbed the Netflix account because you could watch. So I think that's the main thing. Look, is Netflix going to go to zero? No. But I think it'll come back down to a normal level, and it will be a good value play. So let's real quickly go and just check what the PE ratio of Netflix is. So my guess is this number is going to drop. Actually, not bad, 17. That's actually less than the historical average for the S&P, which is 15 to 18. So that's actually pretty decent for Netflix. I was expecting it to be a bit higher than that. I was expecting to be like 30 or 40. Anyway, there you go. That's the Netflix one. What else do I have? I'd buy 1,000 shares if it drops below $1. Lisa, I'd probably buy a bit more than that. Yep. Man used to love the Blockbuster and chill. Oh, yes. Let's see what else do I got. They have a huge market share 2 years ago. Yep. Competition is a massive one. You've got Disney Plus, ESPN, Peacock. What's the other one? Paramount Plus. You know, there's so much competition. I think the smart thing to do, and it's so funny because I've actually been writing this little chapter in my book, is it's about looking at, you know, how many subscription services do you all have? So I am Amazon Prime. I've got Netflix. I actually have a Google or YouTube TV account, which I share. So I get paid for half that one. And we did have Paramount Plus, but we just used it for a week to watch 1883 and then cancel that. But you know, right there, I already have way more than I need. I shouldn't even be watching that much TV anyway. So really start to remove the services you don't need. If you're not watching a service, get rid of it and you save yourself, you know, even if it's $10 a month, y'all know that adds up quickly. Umbrella Academy is a weird one. For season 1, I thought was great. I thought season 1 was really good. Season 2 got a little bit quirky. Prime and Netflix. Yeah, you know, Prime is mainly for the shipping. I shop so much online. It's ridiculous. The Amazon Prime TV isn't really that great. You know, a lot of stuff is paid for, which I hate. Good for you, Steve. You're the winner. 0 subscriptions, you win. You're definitely the winner. So there you go, Tom. That was my answer to that one. Let's look at this one real quick. This is from Lee. It says, please look at the Fastenal chart. Potential gap fill on the daily chart. Oh, you're speaking music to my ears there, Lee. Let's see. Fastenal is FAST. And that's the monthly, so no gap there. Let's check the daily. Oh, yeah. This looks really good. So, again, Fastenal going back into December of 2021, aggressive downtrend, right? It was over $64. Now we're trading at $48.50. However, you had this gap down, which I'm assuming was earnings. I'm assuming that's an earnings play. Sold off, and then it's been ripping up. So you're getting the gap fill as we speak, but notice what's something, at least from my eyes, is noteworthy here. For the last 4 days, we've not made a new low. You've actually made a higher low every single day. Today you have what's called a hanging man, which according to Steve Nissen is a bearish candle. I disagree. I actually think this is a bullish candle because it closed right at the dead high with a bottoming tail. So yeah, it looks to me like Fastenal is going to try to fill this gap. Now let's put a little line up there so we can see where that is. Horizontal line, got magnet on. So $49.99. Right now we're at $48.50, so it looks like you got another $1.50 worth of upside potential here in Fastenal. So if you are going for it, just make sure you got a 3-to-1 reward risk ratio. Your stop loss shouldn't be any bigger than 50 cents at this point if you're taking that trade, Lee. But yeah, I like it. I think you're probably right, and then it's trending for a gap fill. All right, what did I say? It was 45 minutes today, so I'll make sure I keep myself on track here. Blank sent this one in on YouTube. There was just no name. There was a picture, but I don't know how you could have an account on YouTube without a name. And it was this. Can I legally register a corporation, get an EIN, employee identification number, and then purchase additional iBonds? I have purchased a 10,000 iBond in June. The answer is yes, actually. You can, through corporations, buy iBonds. I believe you're still limited to the 10,000, so it's not going to help you out too much, but you could. I would check all the details out, but I'm pretty sure that you can through a corporation, LLC, S-Corp, etc. Let's see. All right, Jeff, you might be with us today, and I thought I'd read this one out to everybody because, you know, my perspective of the commodity markets has definitely been biased to my lack of understanding of commodities. Not lack of understanding, but there's so many other factors to it. And I'm looking at these commodity drops going, hell, this has got to impact inflation at some point. So, Jeff, I appreciate this comment. He says, regarding a comment you made about cotton being down and how you expect to see lower prices from that, and did you think that manufacturers will keep the added profits? The challenge my company is under is we don't raise prices as soon as our costs increase. We hold off for as long as possible, then and eventually have to pass along increases to customers. So even though cotton has come down, it's up to the point where it was back in 2020. And we now have to pay a truck driver $100,000 to drive that processed cotton across the country to everyone else. Wages are up too. Container costs are still up 5-fold from 2020, and we're up 15-fold in 2021 when we didn't raise our prices. So as nice it is to see that cotton is down, all of the other expenses that go along with cotton are still up, so don't expect 50% off your fish t-shirts anytime soon. I don't ever expect 50% off my fish t-shirts, so I like the way you threw that one there, Jeff. Thank you. And you're right. You know, when we look at the cost to bring products and services to market, obviously, I'd be ignorant to think that transportation costs weren't factored into these things. And if those numbers aren't dropping, and I haven't been looking at the Baltic Dry Index or transportation indexes, maybe that's something we can incorporate into the show. I'm just looking at the raw commodities. So one component of inflationary pressure is dropping. But if wages keep going up, that's going to drive prices up. If transportation doesn't drop and actually starts moving back up, then that's going to increase your cost. However, you look at what's happened with the price of gasoline and oil over the past few weeks. Let's bring up a chart of CL here so you guys can not stare at my ugly mug. Here's crude oil. While we've been up for the last 3 days, we've been down significantly over the past couple of months. And I will draw a trend line on here just so we can get the snap mode and see from peak to the bottom here, which was established on, the bottom was the 14th of July. In 20 trading sessions, oil dropped 26%. Now, I actually just see some gas stations around here that were just under $6 a gallon for gas in Orange County, which is great. Happy to have it back. I'm still going to ride my electric bike as much as possible. But, you know, if this transportation or if this component of transportation declines so quickly, then, you know, the expectation would also be that transporters are going to drop their cost a little bit. But who knows? You know, I don't know enough about that industry. I'm just looking at all the different domino pieces and how they line up. So it's interesting, Jeff, how you mentioned that, you know, you hold off on passing costs on to your customers as long as possible. I want to do a test because I mentioned I go to Habit Burger, and I swear that every time I go there, it's a different price. And it's not like, you know, $1 more, but it's like 5 cents more or a couple cents more. And I'm curious. I haven't really paid attention to, are they dropping that price? And I think that somebody like the Habit, if they see, you know, prices surge, they're passing that on immediately. They just go to the register, hit a button, and say, "Yep, our burger is now this much versus what it was," and it's all for all centers. And maybe McDonald's does that same thing. Whereas in your situation, you know, might be a little bit different. I'm not exactly sure how that all works, but I know for me as a business owner, if my costs are spiking, I'm making sure to pass that on. I'm not going to be eating the loss there. And we talked about that with John O'Donnell many times on Power Trading Radio. Who's going to eat the cost of tariffs? Right? Tariffs raise the price of goods and services. Okay, great. Who's going to pay that? It's going to be you and me. You know, when Trump was talking all those tariff talks, right? You guys remember that? Trump was like, I'm raising tariffs 30% here and 20% there and 15% there. You know, John O'Donnell was on the show going, just holding his head in his hands and going, this is going to cause inflation. This is going to cause prices to surge because now that same item that I used to get for, let's say, $10 is going to cost me $10.30. Or sorry, $13 if it's a 30% tariff. So, come on, man. Pay your fair share for your Habit Burger, rich man. You know, it's a funny line that I like it. And I want to make it one of the early lines in the book is, if you want to be rich, act like you're broke. And if you want to be broke, act like you're rich. You know, I already mentioned certain restaurants I won't even go to because I just refuse to pay their super elevated prices. Live humbly. Even though I might have a little bit of capital, Tom, I'm not the one that's going to go out there and just throw it away needlessly, right? We need to be frugal about what we do with our money and make it count. Make every dollar count. I think that a hanging man hammer should be named after the next candle closes. Yeah, but you know, a lot of times, GD, here's what you do. You run a scanner or filter and you search for those things. You know, for example, I ran a filter after the markets closed today, and I've got 2 specific securities I'm looking for based off a hammer formation. So I needed to draw my attention to those hammers or shooting stars or haramis, whatever pattern is I'm looking for. I need to draw it as quickly as possible. So tomorrow, I will hopefully make a play off of these hammer formations and not have to wait for confirmation. I'll give you an example. I'm sure you guys are wondering what. I'll give you one. How about Kellogg's? Right, so here's Kellogg's. You have a hammer formation today, and you kind of almost have a harami formation. So I'm looking at this as a potential bullish action for tomorrow. I can't wait for the next day to confirm that this was in fact a bullish candle or pattern, and then I missed the whole move, right, GD? So let's go to another one, LNT. So this is, I was just looking at the filter for Harami, and this one's not a good one, by the way, just so you know. And the reason for it is it's just kind of trending sideways, so this isn't really a valid, in my opinion, a valid Harami formation. But, you know, to wait another candle for this to confirm, I might miss the move. And that's the main reason I'm pulling up these candles, is to hopefully find some opportunity there. What was the other one? Lockheed Martin was one that I was interested in, but I can't remember. I have it on my list, my watch list to check, so... Yep, location in the middle, exactly. So while those two candles was a Harami, sideways, middle of a range, it's useless. Okay, so Jeff, thank you very much for that one. This one's, I think I answered this one a little bit yesterday, Eric. We talked about ATR, average true range, and kind of how to calculate it. I don't have a specific set of rules for it. So I'll read you the question here and then revisit slightly what we talked about. Eric says, ideally, what's the best way to correct stops? Would it be like analyzing each trade's time frame, ATR? Yes, that's it, right? Every security is going to be different. So, for example, let's just go look at some charts here. And I'm going to bring up, let's say I decide to do a stop loss on Lockheed Martin versus a stop loss on AMC, right? Do you think that these are going to be the same? Like, there's no way that they're going to be the same in any way, shape, or form, because AMC is a $16 stock that has a daily ATR of, oops, I don't want ads. Get that out of here. Where's my ATR? Come on. There it is. Right now, AMC has a daily ATR of right around $1.24. Whereas if I looked at LMT, Lockheed Martin, I'm looking at a daily ATR of about $10.74. So I have to tailor the stop loss to accommodate the security that I'm trading. And you're probably thinking, well, you know, I can buy a lot more AMC versus Lockheed because of price. Well, just trade fewer shares of Lockheed. You know, 10% gain on your account, it doesn't matter whether you bought a penny stock or one share of Berkshire Hathaway. If you made 10%, it's 10%, so who cares? So yeah, that's the gist of it there, Eric, is it's your daily ATR, and then I always look off to the left on the charts and see, is it coming into a zone? Does this ATR accommodate that zone? And might I need to stretch it out a little bit to make it work? I always want to add more to the ATR, not subtract from it. So that's the quick and dirty answer to your question, Eric, is I'm going to be looking at ATR, adjusting it to fit that price chart, and let's say the daily ATR is $1, right? So I'm looking at $1 stop loss or more. I'm not going to tweak that stop loss and make it 50 cents because I'm almost certain that I'm going to be hurting myself there because I'll get stopped out. The odds are just increasing. If I go smaller than one ATR on whatever time frame it is I'm trading, you're increasing your chances of being stopped out. Remember, we don't want to be stopped out, right? We like to have a little bit more breathing room. Therefore, add a little bit to ATR, make sure it goes outside of your supply zone or demand zone, whichever way you're trading, and make that trade. Hammers would be at the bottom and shooting stars would be the top. Correct. Yep, you got it, Eric. And those are my two favorites. Those are the things I scan for every day when the market closes. I look at hammers, I look at shooting stars. Those are just the simple, easy ones. Merlin, you mentioned logarithmic trading. I see log on TV. How does that work? Logarithmic trading or algorithmic trading? I think logarithmic is a way to view chart data. Algorithmic is different. Algorithmic is basically you're computerized. You're automating your trading systems. So Trey Lazara, who was on the program the other day from Trade Pro Futures, he has a couple, they call them strategy. I believe it's strategies or just algorithmic trading where you subscribe to someone's program and that program will automatically trade for you. Here's my blunt opinion of that. Don't do it. I've used two algorithmic trading services as a test. One was with $5,000, one with $7,500. So total is $12,500 I put on it. I have lost not only every single penny in those accounts, but more. And I had to call the firm and say, hey, listen, you kept on running this thing when I had no money in my account, and they refunded it back to me. Quite often what happens with these algorithmic trading is they'll show you past performance of the actual trades themselves. And you're like, oh, wow, the trades were good. But then when you back out commissions, and you'll notice that you do dozens and dozens of commissions a day or trades per day, all of a sudden you're left with very little gains, if anything. It just kind of bled my account dry over about a year. I shy away from those. You all have the capacity and brain power to figure it out, find your strategy, and work. I'm not sure what log on TV means. Oh, TradingView. TradingView. Okay. When you say TV, I'm thinking the television, right? You see your mean right here. It's just a scaling thing. So there's log. Notice, and Tom loves this one because if you look at Bitcoin, let's say on a weekly, what it does is it changes the scaling. So right now, because prices are so high, it completely distorts the old data. So if I click logarithmic here, the chart looks very different, especially when we go back. That's Bitcoin futures. Especially when we go back historically. 1 second when I go something that's really old. Where's my BTC? There you go. Right. So you notice now, this goes all the way back to 2012, and it looks like actually a relatively decent uptrend, right? But notice the scale. This first increment is $1.20 to $3, and then it's $3 to $4.50. So wait a minute. The first jump is $1.80. The second jump, which is the same dimension, it's the same distance on the chart. It goes from 180, and the next one is 450, and then you're at $10. So it's changing the scale to accommodate. And if I do unlog, you'll notice that chart looks rather dramatically different. There you go. All right, hopefully that helped you there, Doug. It's just a way to view charts and not, it manipulates the chart's data to accommodate for current pricing, which sometimes gets really elevated. So like if today, let's say the S&P drops 100 points. Well, 100 points for the S&P is nothing today, but back in the 1960s, it was a huge move. So they scale those things out to kind of keep the magnitude of scale equal. We can adjust as humans better than algorithms. Yep. Well, you know what? And Jerry, I love that you say that because I think what everybody wants, and I'm sure everybody in here would probably raise their hand too, and I said, hey, if I told you I had a system where you just put money in and it just spits out more money, who wouldn't want that, right? Everybody would be like, yeah, me, where do I sign up? Well, unfortunately, a lot of these red light, green light systems, there's a bunch of them at these traders expos that are just making all these fictitious claims, in my opinion. They prey off that want and need that we all are seeking. Ultimately, do we get to the point where I take my trading style and I automate that through my own writing of programming and code and set and forget orders and do it that way? I'd much rather do it that way as opposed to buying someone's system. Most of the time, it's a moving average crossover system. That's usually what most of these red light, green light box systems are. They take moving average crossovers and say, ooh, when the short one crosses the long-term one, buy. They just don't tell you that. The lights just go off on the system. So, all right. Was the flash crash caused by turning off computer trading than algos? I don't know. I don't think it was caused by turning off, right? I don't think it was caused by turning off computers. I think what it was poor programming. And once the snowball started and things start to sell off, the computers just start selling because they're trying to get out of positions. And they don't know. They're just like, oh, it broke a threshold that I was supposed to get out at. Boom, start unloading. Now there's more sophisticated systems in that I think actually start buying in those big panic moments. But that to me is what the flash crashes have been, was generally some algorithmic system started selling off or somebody triggered the algos with a sharp drop in price. So all of a sudden those algorithms just start unloading as well, start short selling or whatever the case may be, and things crash aggressively. Have you ever joined a prop shop? So two different terms. In my mind, a prop shop is where you don't have money. You go to a trading floor and you use their money and trade with it. In that sense of a prop shop, I've never worked for a prop shop. I have been on something that was almost identical, which was a trading floor, but you brought in your own capital. You didn't use the firm's money. To me, those are very different. One would be a trading floor. That's where you trade your own money. And then a prop shop would be where you borrow money. So I have not ever been a prop shop guy. I've always used my own money. And I think that's safer, right? If you look at a prop shop, and quite often what they do is they'll say they're going to train you. Most likely they're going to train you in a high-speed system where they can generate more money in commissions for themselves. That's the usual rub with those types of programs. Then what they'll do is if you're trading their money and you lose a certain amount, they'll kick you off the trading floor. But you had to pay a couple grand to get trained on their trading floor. So basically you're getting a cut rate education. You'll trade their money, and if you do well, then they're happy. If you lose, they're happy too, because they've already collected your money for the education, and you lose a grand or so theirs, boom, they kick you off the trading floor. In some cases, you're actually responsible for your losses as well. All depends on the prop shop. Okay, I thought the prop shop was where you brought in and they took a percentage of your profits. Well, that would be if you're using borrowed money. If I'm going into a trading floor and I'm using all my own money, why should I give anybody a percentage, right? Sometimes if you go in and you're using leverage, that may be the case. Uh-oh, we're at 52. I noticed Big Eb's been real quiet behind the scenes. He's waiting for that 58-minute show. If you had a computer run your trading plan, that would be algorithmic, right? My rules without my emotions and flaws. Yeah, I would call that an algorithmic trading. I think, if we were really to be specific about it, you're talking about a highly configured institutional trading type platform that's going to be, fully automated. But look, if I could take my style and everything about it, just like Tom says here, my full trading plan, all my rules and everything, my analysis, and it would pick it and do it, to me, that would be algorithm. If you are not involved in the trading decision anymore, that to me is algorithmic. All right, wonder why some people join prop shops? Because there's this hope, right? You can go into a prop shop with, let's say, $5,000 and be trading $50,000 or $100,000 or $1 million, depending on the prop shop. And if you start to make good money, they keep a portion of your winnings, which is great. But at a certain point, I think you have to go, okay, I have X amount of dollars. Can I take that and just do it myself without needing to pay out commissions to anybody else? And probably can't. There you go. All right, let me done the EI1. Did that one from Jeff. Since I have, how much? I have 7 minutes left. David, I'll answer this one for you, and I'll post it hopefully in the chat for you on YouTube. He said, I'm a newbie to all financial markets. You offer trading education courses in stocks, options, bonds, futures, currencies, and crypto. No, I do not have a school myself, David. I actually work for Online Trading Academy, and I will hang my hat there until the end. But there's hundreds and hundreds and hundreds of other people out there that will make you believe that they are the greatest traders in the world. If you are looking out there for education, David, and for anybody else, I would highly recommend that you do your research. And if you do go to any specific school and you look at a specific entity for somebody out of Chicago, that you look up FTC lawsuits and see if the guy who runs this school has been in a lawsuit. And if you dig deeper in the FTC lawsuit, you'll see it actually says that he loses money as a trader. To me, there's a lot of people in this industry like that. So never hang your hat on one trader. If you're going to pick a school, go out there and find a school that has, in my opinion, a stable, right, a group of instructors. At one point on the Trading Academy, we had like 150 instructors. That has definitely shrunk by now. But there's still a lot of different instructors that you can take classes with. To me, that's the huge benefit. I think the content that OTA, Online Trading Academy, has created is absolutely fantastic. But seeing how it's applied from instructor to instructor to instructor to instructor, that's where the tire meets the road, right? I can tell you how to do something, but watching me do it and watching other instructors apply it slightly differently might resonate with you differently. So to me, that is a huge, and the experiences that we share. I mean, hell, if you take a class with Larry Jacobson or Todd Davis, who's been doing a great futures class, I've been checking that one out. He's been doing an amazing job. They bring together all the different experiences from their trading career, which in many cases are learning lessons that can save you tens of thousands of dollars in your own stupid mistakes, right? One of the main reasons I love doing this is I'm happy to share my losses with you so you guys don't make those same mistakes. I hope that at some point some of you have literally been at your keyboard and going, oh yeah, Merlin did that. He lost. I'm not going to do that one. I don't want to do that. Great. I've saved you money right there. What happened to Stephen Hanho? I don't know. I know he was actually here in Southern California, one of our more active ones, but don't know. Do you know anything about FTMOs? I don't know what that is. I probably do, but I'm not quite sure what that means. So, Margaret, if you give me more info. If you want, Margaret, email me at TraderMerlin at gmail.com, and I'll get more info on that one. What else I got? School of Hard Knocks, very expensive. Yep. Oh, man. If you try to learn trading on your own without actually paying for, I think, a decent education, you're going to spend way more trying to figure it out on your own. Way more. Yeah, Doug. I wonder who that could be. Let's see. Merlin, remember in the indicator section of the TradingView? Okay. I'll look that up later on. I try to keep it real. Let me go into... I have multiple questions I still need to get to, but I'm going to have to do those tomorrow because I got to go do other things. But here's what we got cooking for tomorrow. Canada, our neighbors to the north, eh? inflation day. CPI numbers coming out. You can see they're expecting an increase in their CPI for Canada as well. At least for there's a common, a median, a trimmed. All those are expected to increase, but their normal CPI, they're expecting to drop from 1.4 to 0.9%. So we'll see how that ends up for Canada. For the U.S., you can see down there in the middle at 7 a.m. Pacific time, we have existing home sales. That will be an interesting one. I think that they've already expected it to drop. It wouldn't be shocking to see it drop even more than that. You also have crude oil inventories, and that's pretty much it for the U.S. If you're trading in Japan, they have a tentative rate announcement, although I don't see the time. It just says tentative. Nothing really out of the ordinary there. The more important thing is going to be their press conference and their outlook with regards to their markets, because they're at negative 0.1 right now. And here is the big stuff. We do officially have another popcorn trade of the day. Of course, we had Netflix close tonight with a nice little 7% pop after hours. Our popcorn trade of the day for tomorrow, well, that's going to be pretty darn simple. It's going to be Tesla. They report aftermarket close tomorrow, and that will be a high flyer. Let's go take a peek at Tesla. We've not looked at that one in a while. Here's Tesla's chart, 743. Let me take it out of logarithmic. 743 bucks, or excuse me, 736 is where we were at when the market closed. Right now, you're at 743, so a nice little move up as well. Still within a big sideways range. On the weekly here, when I go back to the daily, you can see it's still sideways. Tom, spread trades on Tesla? Come on, man. After earnings, let's do it. Other than that, let's look at that earnings calendar. You've got Kinder Morgan, Abbott Labs, CSX. You've got Alcoa, United Airlines, Biogen, and Las Vegas Sands all reporting earnings tomorrow. Some of those are aftermarket. You can see that on the right-hand side there. It says AMC is after market close, and then you have BMO is before the market open. So there you go. All right, everybody, that is going to do it for me. I'm keeping this at under an hour show. I always try to do a shorter show, but I always seem to get right up to 1 hour, and we're at 58 minutes today. All right, cool. Well, hopefully I got most of your questions answered. I will get to some more of those on tomorrow's show. If you have certain things you want me to address and look at, email me, because I won't remember all the stuff that we covered here today. I'm about to go do some more work. You can email me at TraderMerlin@gmail.com, or put your comments down below any of the YouTube videos. I see all those comments. You notice that was what was brought in today's conversation. So hopefully, no Tesla, just doing sideways in the rut. Yeah, probably safer using the Russell or an ETF, right? An index, something like that. Anyway, thank you guys so much. Hope you enjoyed today's show. Be careful and have fun with Tesla tomorrow. It will be a fun one. You get to have Tesla earnings and Elon Musk almost nude on a boat in Greece. Oh, the fun times we have in trading. I'll see you guys tomorrow. Take care.